Ladies and gentlemen, as most of you know, last year BSc started the year-long celebration series as part of its 140 years journey since its inception. BSc, Asia's oldest stock exchange, is the fastest stock exchanges in the world with a speed of 6 microseconds. Corporate governance is an intangible asset, and BSc is proudly taking a lead in making corporate governance an essential part of corporate India. BSc has always stood for maintaining highest levels of transparency and adhering to corporate governance in its bid to giving back to the society. A scorecard is a quantitative tool to measure the level of observance of a code or a standard of corporate governance. Scorecards compare governance practices to a benchmark, which typically is a national code of corporate governance or an international code or standard. In June 2016, the CG Scorecard was introduced here itself at BSc's International Convention Center, and today we all have gathered yet again for an insightful discussion. In today's review seminar, we will learn how this tool can be beneficial for the listed corporates. As per the Indian tradition, the inauguration will be done by lighting the auspicious ceremonial lamp. I request the distinguished guests and dignitaries to kindly do the honors. Shri Damodaran, founder EEPL, Shri Pradeep Kar, consultant IFC, Shri Jatin Dalal, CFO Wipro Limited, Shri Sandeep Lakhotia, Group Head and Company Secretary, Shrey Infrastructure Finance Limited, Shri Navneet Munot, CIO, SBI Mutual Funds, Shri Rajat Jain, CIO, Principal Mutual Fund, Madam Aryan De Lorio, Regional Industry Manager, South Asia, International Finance Corporation, the IFC, Madam Vladislava Rabota, Regional Corporate Governance Lead for South Asia, IFC, Madam Anne Molino from IFC, Shri Amit Tandon, Founder and MD, Institutional Investor Advisory Services, and Madam Hetal Dalal, CEO, IAS, and of course from BSc, Shri Ashish Kumar Chauhan, MD and CEO, BSc, and Shri Neeraj Kulshrestha, CBO, BSc. Deepena lokana jayati, deepastejo mayaha smritaha, Chaturvarga pradodipan tasmat deep yajet priye. This couplet in Sanskrit translates, the radiance of a lamp grants victory. The lamp is luminous. Its brightness imparts dharma, artha, kama and moksha, that is righteousness, prosperity, pleasure and emancipation. This is the significance of lighting a lamp, and hence a lamp should be lit. Lamp, as we know, is also a symbol of knowledge. The lamp being lit, the function has been inaugurated. I request to kindly take their seats in the audience while I call upon Shri Ashish Kumar Chauhan, MD and CEO, BSc, for the welcome address and opening remarks on how corporate governance has gone through a paradigm shift over the years and BSc's initiatives for the same.
Respected Shri Damodaran, Shri Pradeep Kar, Ms. Aryan De Lorio, Ms. Vladislava, Ms. Lopa, Ms. Anne Molinex, Ms. Hetal Dalal, Shri Amit Tandon, Shri Rajat Jain, friends, ladies and gentlemen, it's a pleasure and honor to be in front of you on this very important occasion. Let me give you a background of how the corporate governance scorecard framework started. Mr. Pradeep Kar, who is a good friend and also my regulator, ex-regulator, approached me once. We started chatting up and he said we need to do something for the corporate governance. And I have always had a feeling that over the last 20 years, India has moved tremendously in transaction processing. That is, from few days of order confirmation on stock markets, when you were in Chandigarh or Jammu or Srinagar or Cochin, if you placed an order on BSE, it would take you a few days to get confirmation because there was a chain of sub-brokers and so on and so forth. Today, you get a response time in 6 microseconds. 1 second has 1 million microseconds. And so effectively, we have traveled a long distance. We are amongst the most sophisticated transaction processing systems in the world. We have automated trading, we have HFT, high frequency trading, we have clearing corporations which guarantee settlements, we have depositories, we have everything which you can show. We are practically the best infrastructure for transaction processing in stock markets in the world. There are 2 legs to stock markets. One is the transaction processing, other is corporate governance. And it is very much similar to doing a great trading, but having a bad married life if you don't have good corporate governance. So if the companies don't do what they are supposed to do, you may have great grand trading, which is what happens when you transact, basically when you do transaction processing. But after that, you have an issue, and that's where this was a very important issue we both discussed, and he's connected to IFC in many ways. So we approached IFC, and I'm delighted that the IFC agreed to participate and take leadership in ensuring that Indian corporate governance standards come up to the world, sort of world-class levels. And Ms. Vladislava has been instrumental in getting it done. We also had an issue that if new regulations have to be created for corporate governance, it may be considered, it may not be considered, because we are not the rule-making authority now. And so we wanted to do something which was voluntary, and the new Companies Act 2013 was already there, and we thought we need to create a framework which is also going to grow with time. So we start with something, and we are going to have more and more issues attached to that later on, but it should be created in such a way that it is able to handle, able to allow people to do self-assessment rather than somebody else assessing. Of course, they can always take help from professionals, but if somebody wants to assess themselves, their performance on corporate governance vis-a-vis other companies, they should be able to assess. And India has a distinction, and BSE has the distinction of being the largest stock exchange in the world by number of stocks listed. It was imperative that BSE takes this role of setting up new corporate governance standards. And then, of course, we had help from the IIAS, and Mr. Amit Tandon and Mr. Hetal have worked hard to ensure that the basic framework comes into place. And this is just the beginning. For me, any regulation, any format, any framework has to evolve. So this is just the beginning. We have some very important corporates today participating in terms of their experiences, sharing their experiences of how the corporate governance scorecard is going to help them or has helped them assess their corporate governance framework. And it's not a mere tick boxing exercise. It will have to be done keeping the spirit of regulations and also basically keeping of sharing things in mind. So effectively, I'm delighted that we are inaugurating this seminar today for all of us to learn. And of course, there are people watching this from the internet. This is live on Facebook and Periscope. So people who are also watching this on the internet, welcome. And so thank you very much, and I wish this conference a very good luck and to all of you. Thank you very much.
Thank you, sir, for flagging off this event on such a positive note. Ladies and gentlemen, we have with us Madam Ariane Delorio, Regional Industry Manager, South Asia IFC Financial Institutions Group, based in Mumbai. Ariane was Financial Institution Group Hub Leader in Brazil before moving to India. Prior to IFC, she was the CEO of the Rio de Janeiro Municipality Pension Fund and Deputy Secretary of Finance of Rio. She also led the team for one of Itaú's first international trading desks in New York. She is a Brazilian national and holds a master's degree in economics from London School of Economics and a BSc in economics from the Catholic University in Rio de Janeiro. I request Madam Ariane De Lorio, Regional Industry Manager, South Asia, IFC, for the introductory remarks on behalf of IFC.
Good morning. I hope you can see me. So I'd like first of all to thank you all for inviting me for these opening remarks. Corporate governance is a major milestone for IFC's principles in investments. IFC joined hands with BSC in January 2016 with the initiative to develop the first corporate governance scorecard for India, through a process of consultations with a number of leading experts, companies, and practitioners. In the last 9 months, a dedicated team of experts from BSC, IFC, and IIAS have worked together on developing and testing the scorecard, which we believe will prove to be an important milestone in India's journey toward greater transparency among companies, leading to high investors' confidence, greater access to capital, economic development, and growth. IFC is the largest global development institution focused in the private sector and emerging markets. Working with more than 2,000 businesses worldwide, IFC uses its capital, expertise, and influence to create opportunity where it's needed most. IFC was established in 1956, and it's owned by 184 member countries. It's very interesting, actually. IFC first investment was in Brazil in 1957. And today, the largest exposure of IFC is in India, with over a $6 billion exposure. And overall, we have nearly 215 private sectors as of June of 2015. IFC's focus on boosting financing for infrastructure, renewable energy, logistics, enabling financial inclusion, and deepening capital markets. For each and every investment, assessment of corporate governance forms a critical element of our appraisal process. As we heard here already, investing in equity, it is a marriage. So corporate governance is key for a good, sound relationship in common grounds. And transparency. The scorecard will give us additional tools to provide value add to our portfolio companies. We have just completed internal scoring of IFC on portfolio and are looking forward to promote this tool to other investors, members of the Corporate Governance Development Framework who invested in India. Some of our fellow investors have already used the scorecard and provide their comments. Scorecards are tools for assessment of corporate governance practice. They measure the observance of corporate governance codes and encourage better governance practice and can be used by a wide range of stakeholders, including regulators, promoters, and most importantly, the companies themselves and investors. India has been constantly raising the bar for implementation of good corporate governance practice. The introduction of the New Companies Act and SEBI regulations were great steps in that direction. This scorecard will help to measure not only the extent of compliance to these regulations, but steps taken beyond compliance toward best practice on corporate governance. The partnership with BSE is part of a broader South Asia regional corporate governance project being implemented in 5 countries with the donor support of Japan's Ministry of Finance, which has also made the scorecard work possible. In the coming months, our dedicated team at IFC will be working closely with BSE to encourage companies and investors to use this extremely valuable tool that will provide useful information to all stakeholders of listed companies in India. I wish this event all the success. Thank you.
Thank you for setting the context of today's seminar. Could I request Sri Neeraj Kulshrestha, Chief of Business Operations, BSE, to kindly present a memento as a token of appreciation to Aryan De Lorio, Regional Industry Manager, South Asia, IFC. Ladies and gentlemen, we are glad to have with us Sri Damodaran, a steering personality from the governance arena. He has held a number of important positions in the central and state governments and in India's financial sector, including Chairman, Securities Exchange Board of India, the SEBI, Unit Trust of India, UTI, Industrial Development Bank of India, IDBI, Chief Secretary of the Government of Tripura. After these successful stints, he set up Excellence Enablers Private Limited, the EEPL, a corporate governance and board advisory consultancy firm. He is also a consultant, advisor, coach, and mentor, and sits on the boards of some leading companies as well as on the advisory boards of some foreign entities. He is the founder chairman of the IM Tiruchirappalli and the chairman of one of the promoters of Global Healthcare Systems Private Limited. He is also chairing the Government of India Task Force to set up the Resolution Corporation of India. Sri Damodaran's recent initiative, Non-Executive Directors in Conservation Trust, that is the NEDICT, is the first exclusive forum worldwide for non-executive directors, NEDs, to articulate their concerns and seek solutions based on shared experiences. I invite Sri Damodaran for the keynote address on corporate governance.
Good morning to all of you. Mr. Ashish Chauhan in absentia, he had to leave because of regulatory requirements. Ms. Aryan De Lorio, I hope I pronounce it right. Ms. Hetal Dalal, Mr. Jatin Dalal, my very dear friend Pradeep Kaur, we go back a very, very long way. Mr. Kulshrestha, Amit Tandon, another very dear friend, ladies and gentlemen. It's often been said, not that I subscribe to it, that anything that is worth remembering, worth capturing for eternity is best expressed in numbers and in quantitative fashion. I'm a non-quantitative person. I'm uncomfortable with numbers. And therefore, when one talks about scorecards and things like that, I tend to go on the back foot and see whether this is going to place a bigger burden on me as an individual than I was comfortable with before this came. I'm hoping this is different. For the last several years, whenever I've been asked what I do, the short answer that I give is that I am a student of governance. And I hope to remain a student of governance for the rest of my life. Because governance is evolving, and I believe there is no one anywhere on this planet who can confidently say, I think I know what this strange animal is, what its various manifestations are, what kinds of problems it will throw up, how do you deal with those problems, because Ashish used the word evolution. I think what we need is a revolution in governance. From where we were some years ago, we've progressed significantly. But what remains to be done is far more than what we have got so far. And having a governance tool, a rating card to measure, for people to take stock of where they are and what they need to do going forward in order to be up there with the best and the brightest. It's extremely useful. One of the problems that I have wrestled with more in the recent past than before is that many people treat compliance and governance as synonyms. Compliance is a tick-the-box exercise. It's non-negotiable. If you are in a regulated space, you have no choice, you have to comply. It does not set, if I may use an expression that is not gender neutral, regrettably, it does not set the men apart from the boys. Everybody is expected to be compliant. The real performers, the role models, are the ones who move beyond compliance to governance. Because, not that I'm doing a sales pitch, but what we say in my company is that we are not about ticking boxes, we are about adding value. Because ticking boxes is something that everyone does. When governance was first talked about in India, a lot of people believed that modern corporate governance started with Sir Adrian Cadbury. And subsequent developments, especially with international organizations driving the practice of governance. We seem to forget, and I might have said it here, I've said it in several other fora, that the best explanation of governance came from none other than Mahatma Gandhi, when he made two separate audiences at two different points of time. He spoke about businessmen being trustees. And he also said the ends do not justify the means. Actually, if you read both of those together, I believe you get the best explanation of corporate governance. Every definition that has been attempted by anybody, international, Indian, whoever, does not add too much to this essential truth that the manner in which you do business, the fact that you look at the interests of all stakeholders, that you run your business in a manner to promote stakeholder democracy, that is key to being a sustainable organization. Sometimes the skeptics ask you, if you follow the highest standards of corporate governance, will you run a successful company? No, you won't. You also need to run your business well. But good corporate governance practices are a necessary condition for sustainable performance, even if they are not a sufficient condition for sustainable performance. You can have short-term gains in business without practicing governance. You can say that governance comes at a cost and I don't have the money to invest. Because then you're confusing between expenditure and investment. Governance is an investment. Compliance, as I mentioned, is something that's non-negotiable. If you're in the regulated space, you either comply or you go home, wind up your business and go home. No regulator worth his salt is going to give you too much time to cover up deficiencies in that space. So I'm delighted that very well-intentioned organizations working in this space have got together to give us, to give corporate India, to give stakeholders a measure of governance, a scorecard by which governance practices, governance precepts, governance philosophies in companies would be captured systematically and would be seen by stakeholders, not just investors, existing investors or potential investors, but all other stakeholders, to decide whether the company is being run on the right lines with the right value systems for the benefit of all stakeholders. I am waiting, as the rest of you are, for the product being unveiled, and therefore I will not take too much time. Let me just say this and close. And this is something we've all heard. But when we talk in terms of scorecards being unveiled to the world, it's useful to remember what was said many, many centuries ago. That when the great scorer comes to write against your name, he asks not whether you won or lost, but how you played the game. So once the scorecard is ready, once you have seen how a company measures up in terms of corporate governance, it's useful to look beyond that and to see how the game was played in order to reach the kind of scores that a scorecard captures. My compliments to the Institutional Investor Advisory Services for putting this together, to the BSc and IFC for having pushed hard on this, I understand, so that there is one concrete deliverable in the space of governance that corporate India will welcome, corporate India will respect, and hopefully corporate India will measure up to and validate. Thank you very much.
Thank you for your valuable insights and, of course, the inspirational quote towards the end of your speech. Could I request Sri Nehal Vora, Chief Regulatory Officer, BSE, to please present a memento to Sri Damodaran. Please accept this as a token of reverence. Ladies and gentlemen, we are happy to have with us Madam Hetal Dalal, Chief Operating Officer of the Institutional Investor Advisory Services India Limited, the IIAS. She is responsible for overall business operations. IIAS is a SEBI-registered proxy advisory firm dedicated to providing participants in the Indian market with independent opinion, research, and data on corporate governance issues. IIAS provides voting recommendations on shareholder resolutions for over 650 companies. Prior to joining IIAS, Hetal worked with CRISIL Limited, joined CRISIL as a part of the corporate ratings team, and then moved on to work with Standard & Poor's. She was instrumental in setting up the analytical team for CRISIL's small and medium enterprise ratings business vertical in her last role at CRISIL. She was Director, Business Development, Bank Loan Ratings, holds an MMS Finance degree from NMIMS, and is also a Chartered Accountant. Madam Hetal Dalal, IIAS COO, will now provide an introduction to the Corporate Governance Scorecard and preliminary findings of the pilot implementation.
I think we'll just give it a minute before the presentation loads, but thank you very much for this. Nice. No, that's not on. This is not mine. I'm sorry, ladies and gentlemen, you just have to give us a minute. This is my presentation. I think this one. Great. Good morning, everyone, and thank you for coming here. Let me take you through what we've developed as a scorecard, as well as what we've done is we've implemented this on a certain set of companies. So I'll also talk about the preliminary findings of the pilot that we've done. So this is the evaluation framework. What we've got are 4 essential buckets. We followed the OECD guidelines in terms of evaluating corporate governance. And the 4 buckets are rights and equitable treatment of all shareholders. This is a 30% weight. Here what we are looking at is whether all shareholders are being treated equally. What has the company done in order to facilitate shareholders in them being able to assert their rights? So questions could range from, whether there are any special rights or favors given to a specific set of shareholders in the charter documents, or something as simple as did the company provide any facility for maybe a telecall or a webcast facility for investors to attend AGMs. So these are some of the questions which we look at, where we are seeing whether companies have taken that extra effort to ensure that they're making it easy for investors to assert their rights. We're looking at role of stakeholders. Again, 9 questions at 10% weightage, where we are looking at how the company interacts with stakeholders. This could be in the form of customers, suppliers, lenders, investors, or the community at large. The questions around here revolve around corporate social responsibility. How do you address investor grievances? Do you have a whistleblower policy? Does the whistleblower policy extend to suppliers, creditors, and stakeholders outside the company? How are you dealing with lenders? Have there been defaults in the past? So these are some of the things that we look at as far as role of stakeholders are concerned. In disclosure and transparency, we are looking at how much does the company disclose, and what is the purpose of this disclosure? Is it disclosure to check the box? Is it disclosure to communicate with the stakeholders at large? And how often and where is it that you make these disclosures? In responsibilities of the board, what we are looking at is really the role of the board in enhancing corporate governance. In this, we look at what is fundamentally the board composition, how is the board functioning. We look at board committees. Again, the roles and responsibilities of the board committees. Is there communication to investors on what is the roles and responsibilities of board committees? Are there charters available? So these are some of the areas that we look at as far as responsibilities of the board are concerned. Of course, this is a detailed questionnaire. It's a 70-point questionnaire. Some of those who've had a chance to take a look at it will see that it gets into reasonably granular levels of questioning. But this is a broad framework that we've used to evaluate the level of corporate governance that a company presents. Let me take you through a list of sample questions. Like I said, did all board members attend the previous AGM? This is where we look at, did investors have a chance to interact with all board members at any point in time during a year? So, there are 3 levels that we look at, 0, 1, and 2. Of course, if the entire board has attended the AGM, then the company typically gets a 2, because that allows shareholders to ask the right questions. So this is really just a sample set of questions. I would encourage all of you to go through the BSE portal and look at the questions which are there, and there are a list of about 70 questions. This is how we bucketed the corporate governance levels. So 0 to 50 is the basic corporate governance. This is an easy scale up. Most companies will reach this. It gets tougher as you go ahead. 50 to 60, if you get a score of between 50 to 60, the corporate governance levels are fair. If you get it between 60 to 70, then the corporate governance levels are good. And above 70, we've said anything above 70 is actually a benchmark for most companies to follow. In the pilot, what we've done is we've taken 20 companies. This is a mix of some of the Sensex companies, and as Ariane had mentioned, IFC's portfolio companies as well. We have a mix as far as, from a standpoint of how the companies are managed, how these are owned, and what kind of businesses that we are looking at. And we've tried to diversify as much as we could. And now I'm going to unveil what the study shows. So this is the scores that we've seen of pilot companies. As you can see, this is reasonably well spread across the entire spectrum of 4 buckets, with a large proportion in good corporate governance levels. The question to ask is what drives an overall score at leadership level vis-a-vis what keeps the score at a basic level. At a basic level, you're pretty much, not doing what you're supposed to do at very simplistic levels. We find that typically public sector companies tend to have come to fall in the basic category, largely because a lot of them don't have a board composition which even meets the basic regulatory compliance levels. And I'm not talking about specific companies that we've done pilots of, we're not disclosing those names. But even if we take examples, there are enough number of companies in public sector where board independent directors is seriously a concern. SBI, for example, doesn't provide e-voting. They're going to merge the subsidiaries, but that's not coming to shareholders for a vote. So these are some of the things which tend to drive the score in the region of the 40s. At the higher end, when we look at corporate governance levels at good or leadership quality, what we find is a sharp contrast to the others. There we are seeing companies which are looking at themselves from the lens of stakeholders or from the lens of investors. So they are answering, in effect, for all their disclosures and their behavior and the way they operate, they are answering questions that investors would normally ask and investors want to see. On the other scale, at the other end of the spectrum, where we are seeing companies in the basic or the fair range, we are seeing companies where disclosures are more focused on what the company wishes to disclose, and therefore the disclosures tend to be a lot more limited. And that's the key sort of difference in as you go up the scale on how you need to look at the corporate governance of your company vis-a-vis where you are today. All of this, let me also talk about the fact that all of this is a journey. It's not about a point in time score. This is a pilot that we've done based on publicly available information. I'm sure if companies participate, we'll see the score being different, largely because there will be a lot more that the company will be able to add. What we've looked at while devising this scorecard, and I'm also going to take you through some of these examples, is practices that we've seen across the globe. We've relied on what we've seen in the US, UK, Australia, Singapore, Hong Kong markets. What I'm going to take you through now are examples that we've seen which are very, very different, and and you'll find these interesting in terms of, here we go, sorry. Okay, so let's take US for example. This is Microsoft's annual report. In this, they've disclosed the core competence of every single board member in buckets. So you've got the board members on the top here, right? And you've got the competence here. And they've actually outlined which board member has what kind of competence. So if you have an understanding of diversity, in a lot of the conversations that we see in India, diversity is looked at more is largely looked at in terms of gender diversity. But this is really diversity which goes well beyond gender diversity and focuses on skill sets as well as cultural and market intelligence. So this is disclosure. Now, admittedly, you're not going to see this in every company based out of the US or in every balance sheet of a US company. But this is truly an example of good quality disclosure, which I thought one should share with you. Let's look at, Let's look at Singapore Exchange. Dividend policy, SEBI's come out with, a requirement companies must have a dividend policy going forward. And what should be a dividend policy? A lot of the disclosures we see on dividend policy today don't really specify a ratio or a number that the companies are going to put out. Some companies do, but not most companies don't. But look at the clarity of Singapore Exchange's filing. They're saying, from FY 2016 onwards, SGX's dividend policy is to declare a base dividend of 5 cents per share per quarter, an increase of 1% per share. For each financial year, SGX will pay as dividend amount which is no less than 80% of the annual net profits after tax, or 20 cents per share, whichever is higher. That's a clear indication of what the company is going to do. So this is really good quality clarity on something as simple as a dividend policy. In UK, let's look at Marks and Spencer's, and this is interesting in terms of the auditor engagement policy. And they talk about, what are they going to do, where they're going to engage with auditors on non-audit services. In India, of course, non-audit services is not something that companies can engage with as far as the statutory auditors are concerned. But notwithstanding, the UK market does allow it, and it's good to just look at what is the kind of disclosure that they're making, which includes even the checks on independence, and where they say that, advocacy, if the auditor is present in many engagements, becomes a threat if the auditor becomes an advocate of an extreme position or over familiarity with a particular issue. These are checks on independence that the company does do before engaging auditors on non-audit fees. In Hong Kong, we looked at Lenovo's disclosures, and they have actually shown how the board has allocated its agenda time over the whole year. They've also said that there were 7 board meetings held. 4 of these were primarily to discuss quarterly results, and the remaining were for reviewing strategy. And this is really the disclosure that they're giving. So the point being made is that there is a lot of disclosure you can make which will help investors, but doesn't necessarily have to be as sensitive as seems to be the hesitation that we see with a lot of corporate India. In Australia, again, you look at, the entire purchase and supplier policy, which talks about not just what the policy is in terms of purchases and endorsements, but also how should the supplier behave and what is the code of conduct. Let's not leave India behind. We've got really good examples from India as well. One can't talk about corporate governance in India and not talk about Infosys. Of course. So Infosys actually puts up the entire webcast, you can see, of the AGM. The whole webcast is put up. It also allows company investors to ask questions through a telephone line. So you don't have to be in Bangalore to be able to attend the Infosys AGM. You can actually attend it from anywhere. They also have all the presentations available which were actually made at the AGM. So this is the degree of transparency that they're willing to provide their investors. Let's look at Wipro, for example. Wipro has a good code of conduct for suppliers, which extends not only to direct suppliers of Wipro, but also those who supply services and products on behalf of Wipro, and extends to all Wipro affiliate companies as well. But most importantly, look at this piece, Speaking Up. I'm not sure whether it's very clear, but it's called Speaking Up, and it gives you a link directly to their whistleblower policy. The whistleblower policy site is actually managed by a third party. And it allows suppliers to write their complaints or talk about violations in process and policy without even having to disclose who they are anonymously. So these are some of the practices which we find are good as far as governance is concerned. Tata Steel, of course, and I'm disappointed that PK isn't here today, but if you look at Tata Steel, they've done something very different this year in the annual report, and I encourage all of you to actually read Tata Steel's annual report. They've classified their capital into 6 buckets. They call it the financial capital, the manufactured capital, intellectual capital, human capital, social and relationship capital, and natural capital. So they are talking about everything that a company does and how it impacts the environment. So there's, of course, manufactured capital is your assets, financial capital are your numbers, but you are also talking about how the company relates to the society, relates to the environment, and relates to the entire community at large. Most importantly, when they identify risk of the businesses, they've articulated at every stage what is the capital that gets affected and what is their response strategy. Which is really worth going through, and I would encourage once again all of you to look at this annual report. They've done this integrated reporting for the domestic business. I suspect next step will be to do it for the entire business. But this is a great start, and it puts them ahead of the curve. Sorry, I'm not able to find the. Yeah, here we go. Action plan for companies, and I thought the idea of showcasing some of these examples, and of course we don't find these commonly used across all companies, but these are great examples to look at. And therefore what we believe for companies also is to look at what others are doing around. There's clearly a level at which you can get to. As far as the scorecard is concerned, yes, at this point in time, do a baseline and at least evaluate the level of corporate governance that you have, and get stakeholder feedback. The more you talk to stakeholders, the more you realize what it is that you need to disclose and what is that stakeholders really want to see. And then I would encourage, of course, once you get an independent validation, to therefore publicly use the scorecard. Let me end by saying that it is a journey. The evaluation today is a point in time. But definitely we can all get better than where we are. And thank you very much for your time.
Thank you for the detailed presentation, which I'm sure will be certainly beneficial to all present. And now, Shri Khushru Balsara, Head of Listing Compliance BSE, will present a memento to Madam Hetal Dalal. Please accept this as a token of gratitude. Thank you. We are privileged to have with us Shri Jatin Dalal, Senior Vice President and Chief Financial Officer of the $8 billion Wipro Limited. Prior to his current role, he served as the CFO of Wipro's IT business. Under his leadership, the IR team won the coveted Institutional Investor Award for the best IR function in India. Before joining Wipro, he was part of the prestigious financial management program, the FMP of General Electric, GE, where he was a Global Corporate Honors Awardee. He's a Chartered Accountant from India and Chartered Global Management Accountant, CGMA, from UK. Shri Dalal holds a Bachelor of Engineering degree from National Institute of Technology, the NIT, Surat, India, as well as a postgraduate diploma in business administration, the PGDBA, with a specialization in financial and international business from NMIMS, Mumbai. He is on the NYSE listed company advisory board at the New York Stock Exchange. I request Shri Jatin Dalal, CFO Wipro Limited, to share his initial thoughts about the CG scorecard and how governance practice is followed at Wipro Limited.
Hi. Hi, morning. My name is Jatin, and as very kindly I was introduced, I take care of finance function for Wipro. I am very happy to be here. Mr. Damodaran, glad to be here in your presence. He has been sort of a very leading voice on corporate governance, and we have learned a lot from our interactions with him, and some of that what we do is reflected in thanks to some of the inputs that has come through our discussion, dialogue, etc. with Mr. Damodaran. So we are very happy to be here and talking specifically on the topic of corporate governance. I have sort of a little bit of assorted thoughts at which finally converge into the topic of corporate governance, and I will try and stitch them as well as I can to be able to build a flow that you are able to see through our eyes as we see governance. So we, like it is for anything else where you put your time, energy, resource, effort, passion, you always start with question of why, and fundamentally even for governance as well as it has come to become a hygiene factor in corporate world. I think we should all always go back and ask, saying why governance and why it is relevant, and fundamentally what we believe that as you become more and more public, as in you utilize corporate resources, you create social impact, you build projects which support institutions, you build software programs which help army, provident fund, so on and so forth. You cannot say that I am enterprise which solely is gold on profit or return on capital employed, and some of these more financially driven metrics. And here I seek to make a distinction. There is always this feeling that just because you are more owned by public, the governance standard should be high. In fact, we always prided fiercely in ourselves that while we are in a very materially owned by a promoter group, our promoter group owns us about depending on what percentage you look at, but anywhere between 72.5% and 73.5%. And that percentage is only, the differentiation is because if you take ADR in your numerator, in your denominator or not. But for that kind of holding, we take very fierce pride that for the remaining 27%, they should not feel that they are in a company where a promoter owns 73%. In fact, we go all out to make sure that nobody feels ever. In fact, a lot of time our investors don't even know that the promoter owns 73% or we behave in that manner. So we believe that I think what we do determines whether what should be the level of or extent to which we should go. And at the stage at which we are, which is $8 billion organization, working on a global scale, working in 57 countries, I don't think there is any threshold that we need to worry about. The more we do, the better off we are and the better off our shareholders and stakeholders are. But specifically in context of India, I think, and this we feel very passionately, that I think there is going to be increasingly large amount of cash which will need to get mobilized out of the savings of the public at large, and need to get channelized into the development of nation in some form or the other. And this is altruistic as it sounds. It is not just about building nation, but also a lot of companies will come and build smart cities. A lot of companies will come and invest money in infrastructure. There are many small or large players, including e-commerce companies and others, who are in some form uplifting the Indian middle class from a point A to point B, and that is also a journey of leveraging a nation's strength. In all of this, you will need capital, and we believe that there is only so much capital that a country can mobilize with a certain threshold of governance that it operates in. So more than anything else, I think one fundamental differentiation of people being able to generate capital which is flowing out of the debt and bank deposit and many other debt related instruments into equity would be very fundamentally driven by the corporate governance standards in the country. And it would be by and large beneficial for the country, because the people who are generating earnings on debt instruments eventually will find that debt is not a great asset for long term. When I was in Treasury 15 years back, I started my career in Treasury. We used to borrow in GE at 17% interest rates. I mean, no matter where we are in India today, I can assure you 17% is not coming back. 17% over a prolonged period of time. And maybe 11% is not going to come back. So eventually you will, the people like us who are working today and will retire in 15, 16 years, and therefore are looking at an interest rate yield between 16th year from now to 40th year from now, cannot rely on that 11% or 8% or 9%. That's not going to be around. And therefore, equity is going to be the de facto option. And if that's going to be de facto option, you will have to start cultivating and curate that de facto option by creating a governance standards which is far better than what it is today. Today, I don't think many of us will find confidence in looking at 355th company by market cap or similar threshold or earnings. You will have to build that grounds up, not just in the top 5, 10, 20, 30 companies, right? I will for a second talk about Wipro's governance standards and why we strive very hard for it.